Top of the morning to you traders. Welcome to the Flow Show, Thursday, 5th of December. We're slowly eating through the rest of the year, waiting on the data and everything to come and getting up and gearing up to do some trading. Kay, you ready to do some trading or you got some knitting to do?
I think today is more a day to do the knitting and the early Christmas shopping, mate. It looks a bit too quiet for my liking in those markets.
Yeah, a bit of hopefully calm before the storm.
Hopefully.
Yeah, we shall see. We shall see. It's as we've learned from this year alone and other years, anything can come out of left field. So you can never take your eyes off markets for more than a minute. Right, let's put our eyes on some of the headlines that have been out overnight. First and foremost, let's just get rid of that for a minute. First and foremost, we've had one of the BOJ doves out speaking and not being overly hawkish, as you can imagine. This is the BOJ member Nakamura, who says he's personally not confident about the sustainability of wage growth. We're at a critical phase where we must check many data points. He sees cautiously adjusting the degree of monetary policy support in accordance in the improvement in the economy. He says Japan's economy has yet to move on course for a stable growth path, and although the economy is recovering moderately, it's still showing some weak signs. He says Japan's consumption is lacking momentum. He personally sees a chance inflation may miss 2% from fiscal 2025 onwards. But then he does offer a little counter, saying he's not against a hike, but feels the decision should be data dependent and that there will be plenty of data coming out before the next meeting, including the Tankan survey. So he wants to scrutinise all that before deciding whether a rate hike would be appropriate. So fairly bearish comments there, unhawkish comments from that guy there, but it just shows a range of opinions going on at the BOJ. Anything we should be taking from those, Kay?
No, a dove is a dove. Yeah, cautious, data dependent. But the red line in there is that they all hope and pray that wages continue to be hiked. Maybe a bit of a wait in that case. He's of course only one of the guys, right? And he's not the main decision maker. If you look at Ueda, for instance, but yeah, Japan is always going to be a bit probably a bit more cautious than anyone else, and that's where the market sometimes misses the plot is a big word, but is sometimes mistaken when it thinks about Japan in comparison to other countries, other central banks. They are for sure not that aggressive, and they can't because they still have this couple of 3 decades or so of ultra low growth that's too fresh in their minds, and so they're always going to be more cautious. So yeah, no big surprise. He is one of the dovish guys, so I'm not reading too much in it, not changing my view.
Yeah. And if they do hike at the next meeting, and obviously depending on the size of the hike, unless the data really takes off into early 2025, that'll probably be it and a pause until they see the next round of wage data coming through in the spring. So if the market starts getting all expectant about follow-up hikes, it's probably going to get disappointed.
Yeah, the thing is there, Ryan. I mean, that paints a little bit of a dangerous picture for those who want to be short dollar yen for longer, because imagine that Bank of Japan pauses, and chances are, I'm not saying it's going to happen, but that the Fed does 25 this month and then also goes on pause. If both pause, I think it's perhaps a bit dangerous to try to be short dollar yen going into the new year.
Yeah, exactly. But it wouldn't really be a pause from Japan because they're not exactly hiking at a fast clip anyway. So yeah, they're going slow and steady, as we always knew they would. So,
Yeah.
you know, the Fed pausing is an active pause, whereas Japan isn't a pause. It's just what they're doing anyway. But yeah, we spoke about this yesterday on Face as well, didn't we? That yeah, if that happens, if the Fed pauses and the BOJ indicate that they're not rushing for any more hikes, then yeah, that's probably dollar yen shooting back higher again.
Yeah.
We shall see.
Then Suzuki will have to go back to work.
Yeah, they might have to get Kanda out of his job. Whatever right, speaking of the politicos, Mr. Ishiba has said the government should consider what is a suitable FX level, which I thought was a bit of a strange comment. They don't talk about FX levels directly. They talk, obviously, they have levels where you know, things are affecting importers, exporters, that sort of thing. Is he hinting at something that they might start putting a number on it, or you know, having limits to what they deem as suitable for a level?
Well, they have this joint thing that they put in place like yeah, a number of years ago, and then revised it. I think they left it unchanged when Ueda took the seat at the Bank of Japan. So they have this cooperation, let's say, pact. But I don't know whether they want to put a fixed number on it. It's not in the. I don't think it's in this agreement that they signed. At least it's not in the agreement. That's for sure. But I mean, they would have to change it to decide. That I still think is it's more a case of speed than really a case of putting strict levels on it. They can't. I mean, they've seen how things work when you try to really stamp a currency down to a certain level. They have tried it in the past, not officially, but I remember when they were sitting at 105, for instance, and then I think it was around 90 or so on the other side of the dollar yen. And then they also have the lesson of the SMB. I don't think they are going to pin a certain number on it, but they may say that, for instance, if in 1 year's time the dollar yen goes up, I don't know, 10%, that's far too much. That could be something that they talk about.
Yeah, absolutely, mate. Over in the UK, apparently, according to reports, over half of UK firms are going to raise prices after the tax hike delivered at the latest or recent budget. So firms are still counting the beans from that one and reacting to it, which obviously is not good news for the Bank of England, trying to get inflation down. That if it's significant, that inflation rise from those price rises, which the Bank of England don't expect. Bailey doesn't expect a big reaction, but if it is, then they will be forced to stay higher for longer. We've had a bit of data out around the grounds. German factory orders beating expectations, but still printing negative. So still looking pretty crappy over there. We've had some IP numbers as well. France posting a negative, Spain posting a positive, although that was year-on-year numbers. We had some construction PMIs out, which all look pretty crappy still. Germany going backwards even more on that one. All the rest staying in contraction areas. A couple of improvements here and there, but nothing to write home about. The UK printed a half decent number though. Was expected to pull back a bit. Instead, it went up. So that was good news. We also had what's called a decision maker panel, which is pretty much a business survey about inflation expectations. 1 year CPI expectations went up 3 pips to 2.8 from 2.5%. Prices being charged over the next 3 months also rose 3.7%. These are expectations from 3.5%, so they went up as well. Again, something that BOE will keep a close eye on. Eurozone retail sales came in a bit crappier than expected month on month, down 0.5%. These are October numbers. So what we probably should be looking for is a decent bounce in November if everyone's been taking advantage of all those sales. If November's crap, then that's going to raise more questions about the state of the economy. But for October, it is a bit crappy anyway. As for the ECB, Econostream kindly did a little piece yesterday with some insiders, and it showing that we're probably nailed on for a 25 pip cut at the ECB meeting, which is where we were all pretty expecting anyway. They say that that will happen barring any shocks in the new forecasts to come. They spoke to some insiders on the matter. One said it would be a big surprise if the projections surprised us enough to get a 50 basis point cut, and then said a 50 cut in December could lead to an erratic approach that raises questions, and cannot imagine cutting by more than 25 pips in December. That was one insider. Another insider says don't see any reason why we would need to speed up easing. There's the high uncertainty until March calls for a gradual approach to easing. Small steps are the logic for the time being. And then the last insider said that a 50 pip cut would indicate concerns that developments don't warrant. Things are going according to plan, which justifies a 25 pip cut. After that, we had Makhlouf saying that a 50 pip cut might be needed, but he says he prefers to move cautiously and prudently. ECB's Nagel favours a gradual, cautious approach to rate cuts, although this was the guy who a couple of weeks ago said that the size of a debt cut is still open to question depending on the forecasts and the data. He also added that he has no objection now to cutting rates next week, but is reserving judgment until the meeting. ECB's Kazakh says rates should continue to decrease, including next week. We did have Lagarde out, that she was speaking at a hearing, so really only concentrating on policy thus far this year and where they are now, according to the last meeting. Kay, the constant stream of wafflers, insiders, whatever. Let's call it what it is. It's going to be a 25 unless the forecasts do shock.
Yeah, exactly, mate. I mean, now they I don't know why they. Well, it's December. They're probably trying to make the call of the year for the last month. But yeah, we've been saying it for a while. It's going to be a 25, and that's it. No need to listen to too much of those anymore. Those were really interesting. Lagarde, she fails or she doesn't want to commit. She's for sure doesn't want to tell anyone what she's thinking. That was clear. She's tried very hard not to say anything. On the contrary of Powell, who was trying very hard to say something yesterday, but they wouldn't let him. So yeah, it's what we have said. They're all in 25s, I guess, at least for December to close the year. That's at least the main ones. That's what I'm thinking anyway. So yeah, I mean, they have to probably justify their seat and their role, and so they need to talk.
Yeah. So yeah, I think sitting here now, we know what's coming. It's a 25 unless there's a real huge change in the forecasts, one way or another, more bearish or on inflation and the economy or whatever. So really, the only trade we're probably going to get is what is indicated for the new year. Being December, this will be about how the economy has performed this year and what their expectations are for next year. So it is a forecast meeting. Those forecasts will be important in terms of where they see inflation coming down to, how sticky it might be, so on and so forth. So really, this meeting is going to be about setting up for next year, more about what's happening now. Derek, you ask about how much is this French political instability affecting the euro? Well, yesterday, the French government, in whatever form it currently is, it lost the no confidence vote. The motion passed with 331 votes. So PM Barnier is on his way out. He did manage to last few days longer than Liz trusted, but he's on his bike, so we have to go through all that mess, picking a new PM. There's no chance of Macron resigning, even though it's been called for, because he's stated previously after the general election and after this that he has no willingness to leave his post until 2027, I think it is. Or was it 2026? Can't remember. Or until his time is up, basically. No one's going to shift him from that. In terms of market reaction, Derej, Euro didn't do anything when that vote came out. We did have the initial wobble when it was all kicking off earlier this week, when the market got a bit out its pram with nothing better to do. But you can see that we've had a 60, 70 pip range all week. That tells you how much the market is really trading this instability. Though you could make an argument maybe it's not bouncing anymore because of that. But yeah, we're over that hump. I think the market doesn't care. France government has been in a mess since the election, the snap election that Macron lost. So this is just a bit more to that. No real change there. I would say, yeah, all baked in. Yeah, thanks, guys. It is 2027. I thought I was right on that one. So move over France. Back to the US, and we'll look at some of the data yesterday, though we didn't shake any trees with that stuff. ADP came out thereabouts, depending on what you had on your calendar. This one had 166. I had one that had 150. So we were thereabouts with 146, although the last month was revised down from, I think, 233 to this 184K. But overall, positive jobs growth. The only sector that lost jobs in the ADP was manufacturing. No shock there, really, given the state of things. But otherwise, moving on, and no one's taken anything from that to go forward to the NFP. Canada out some labour productivity numbers, down 0.4% for Q3, so not good reading for the BOC. Then we got the rest of the PMIs from the US. The final S&P number coming in a little bit softer, 56.1. So that was a bit lower than the flash number we saw. Then we got the ISM number, which it was disappointing from the point of view that it came in softer than expected. And last month, prices paid, though ticked up, was expected to pull back. Employment came down as well. So not the greatest report, not the worst report either. We're still looking at positives in the service sector in November, but maybe that employment number ticking down a bit might get people looking a bit more bearish about the NFP. Not that there's a direct correlation, of course, between what happens there and what happens in NFP. So overall, a little bit softer, but nothing to suggest that anyone that the Fed will start going for 50 basis points or anything like that. We've got durables, revision out as well, factory orders, nothing of real note out of those numbers there. So moving on from that one. Fed heads, and some of them have been a bit all over the shop, including Fed's Mausoleum. Says the time may be approaching to slow or pause interest rate cuts. And then he went a little bit all round houses. He said it's possible to pause on cuts at upcoming Fed meetings, but he's keeping all options open for the December meeting. A pause could come at December meeting or later. We'll wait to see the data before he decides on what he's going to do at the meeting. It says there is uncertainty over the neutral rate. It could be between 3 to 4%. So thanks for nothing. Fed's barking, and this will be his last FOMC, if I'm not mistaken. He said he's encouraged where inflation is headed, sees positives and risks on both sides of the Fed mandate. High inflation in Q1 would be a signal we have a lot more to do. Fed's daily, we do not need to be urgent. We need to carefully calibrate our policy. We'll wait until December meeting to make a decision. And then we go on to Powell. Now, I wasn't watching the comments live, so I was doing a bit of catch up. But in my opinion, he sounded fairly bullish and, if not somewhat hawkish. He said the US economy is in very good shape right now and feels good about where monetary policy is. We have moved very, very quickly with rates. We're not quite there on inflation, but making progress. The Fed can afford to be cautious in finding a neutral rate. It says the economic strength gives the Fed the ability to take some time on rate cuts. And the economy is stronger than we thought in September. So I took that as being fairly bullish, the economy, and very undovish, even maybe hinting that there might be a pause on the cards. But not that the dollar reacted in any which way. Kay, what are your thoughts on Mr. Powell before the next FOMC?
He's keeping all his options open. I still think that they do 25 now, but then the chances are very high for a pause afterwards. And maybe close the year and then start to pause and wait until his royal orangeness takes the seat to decide. That is how I'm looking at it. But yeah, he's well, I mean, Ryan, we look at the numbers. We've been talking about that so often, about the divergence between whatever you see out of Europe or Japan, or even if you look at Switzerland and stuff like that, the numbers in the US are still defying the laws of gravity. So it is a fact. They can pause. Will it be this month? Yeah, my base case is still. It's not that I'm like 100% done 25 basis point. There is obviously a lot of I mean, cases to make for them to be on hold. I do think though it's just the bar is still not low enough for a hold. Yeah, so but it's getting down to 60-40 from maybe 90-10 or 80-20. It's not.
Yeah.
I don't think anymore. But yeah, he's got all reasons to still be optimistic. The data are there.
Yeah,
Unless
absolutely.
tomorrow, of course, unless tomorrow we get a shit report, because it should be a good one in theory. The jobs report tomorrow, because it's going to compensate for the weather before, right? That's the expectations that we're seeing. So people are already expecting a good report tomorrow. But if that fails to show some compensation for those weather events, then yeah, it may be a different thing. But I mean, whatever happens is not going to be a 50 this month. That is out of the question. It's going to be max 25. Yeah.
Yeah, absolutely. But it just shows you the difference between two central banks. You've got half the ECB claiming victory on inflation and that the job's nearly done. People like Bill Roy and the like. And then you've got a Fed who gaining greater confidence in inflation progress, and then they pulled that sort of rhetoric out the statement, and now they're all sounding a little bit more what happens if inflation does stall? We might be in the pickle again. So it's definitely different faces from each side of the pond at the moment.
Yeah, very much. They're very much divergent, and again, I mean, look at the data, and you see the reasons why they can be divergent. You look at France, actually, which was a bit enjoying some greener shoots. I still think on the back of the aftermath of the Olympics and stuff, are now sliding back. Germany, Jesus, it's awful. But then you look at the States, and despite those high interest rates, despite whatever that goes on, I mean, they are still doing pretty well. We were afraid that unemployment rate would start to tick up, and we're still around 4.1 or so percent. I mean, this is only things that for a big block, I mean, only things that other big blocks can really dream about right now.
Yeah, absolutely. And speaking about NFP, while you mentioned it, I'll just put the NFP competition in the Zoom chat there. So if you are with us on Zoom, you can enter the NFP competition via that link there. It's open this month. If you're watching the show via YouTube, Twitter, wherever else, just look us up on Twitter. You'll find the NFP competition. You can win some fantastic prizes from a Squawk service via our mates at Live Squawk, the Peak Suite, coaching session, free access to ForexAnalytix, tons and tons of prizes. So get on board there, pick your number. You could be one of 3 lucky winners to end 2024 as champion NFP picker. You'll get a virtual trophy, i.e. an emoji on Twitter. That's what you get. But yeah, good luck with that.
Some are in the running to be the real king or queen of 2024, right? Some have had multiple closest guesses this year.
Yeah,
if I recall correctly. So some of them, could be really king or queen of 2024. Oh, by the way, I think we just need to remind people of the one single rule to put in your guesses. Only on the original X post, okay, guys? No use to reply on LinkedIn feeds or reposts from any one of our team. Only guesses on the original post will be taken into account, because every time we get people contacting us, but no, it's not gonna work.
Yeah, and we have that rule because I don't want to spend my Friday afternoon running around Twitter trying to find where everyone's posted their guess. So yeah, on the original tweet, or it won't count. So have a crack at that. Good luck. Right, what's next on the agenda? I think that's about it, really. We Powell, unless you got anything else, Kay?
Yes, I've got something.
Ooh.
And yep. The new that's Trump nominated. The new ambassador to the UK will be a Spurs fan. If you saw that, Warren Stevens is a very active.
What was that?
Warren Stevens is a Hotspurs fan, mate. He's even regularly coming to games, apparently. I read that yesterday. So I think this is going to be very good for the UK US relationship. Now, I mean, it's only half a joke, by the way.
Oh, if he's a Spurs fan, everyone over here is going to hate him.
yeah. Only hammers can join, can get into the seat. No, but I mean, I was only actually half joking, because he's a guy who is and that's a bit surprising if you think about what Trump is doing in general, putting pressure on everybody. If you choose somebody who has already some, I wouldn't say roots, but some very active relations with the UK, because he's a banker, right? He's an investment banker, and his family bank has already had quite a few relations and deals with organizations and banks and stuff in the UK. So that, to me, somewhere is showing that the UK may just have that half a toe advantage, if you want, Ryan, over the rest. What do you think?
Yeah, I think you're probably right. You know, it's always good to have someone who knows the area they're stepping into, if you like. So yeah, it could be a positive. I'm more worried about our side and the likes of Lammy and Rayner and the rest of them to forge a relationship. You know, the Yanks will love to forge a relationship, but it's whether our lot can reciprocate, and I think that's going to be the problem. But
yes, Mike, Trump wants to make the Spurs great again.
Yeah, I think that's a task that no one can succeed at, Mike. If I'm honest with you, obviously speaking as a West Ham fan, yeah, that's beyond the Almighty's task to make Spurs great again. We hope, anyway. Right, let's move on before we start fighting amongst ourselves. What's going on? Not an awful lot. I don't really know if we need to bother looking at euro dollar. It's not doing anything. It's going sideways. Everyone's waiting for something to happen. Until that something happens, then move on and maybe trade Bitcoin while it's going through 100k. And no, I'm not even going to bother looking at that. No interest whatsoever. So what shall I look at? Well, one thing I am actually trading, and I don't know, watching paint dry is getting more exciting than trading euro sterling at the moment. I'm waiting to see if we can actually get below this line and push down. I've been in my short for over 2 days now, and I've just managed to take 23 pips on a little slice this morning. Waiting for this one to break down. What?
You're a hero.
It's not too bad. I managed to catch pretty much the
you're right.
well, more than
No,
the
you're
daily
right.
range.
I'm actually with you, mate. I'm with you. It's paint drying, but it drips off the wall slowly. So yeah, I think we are still in the right position there.
Yeah, I think so too. But I'd like to see it below that, because it really is we have got these prior lows and little moves and whatever. So I expect a bit of trouble. But if it does properly break this level on a longer term basis, let's see what chart I can put it on quickly. Let's put it on that one. Then it could be a bit of a gateway down at least to the 82s. And maybe even more, and it would indicate a potential breakout of that range, big long range that we've been in for several years. But this is euro sterling. We could be sitting here this time next year, and it will still be trading 82.70s. So we shall wait and see. Come on, Ryan, be a bit positive about it. Right, Aussie dollar. That's looking constructive for those who might be short. This 64.40 level, which you guys and girls know I've been talking about for several weeks now. I was looking back at some of my older charts. It's actually, I had a bit of a zone, 63.40, 63.30, 64.30, 50, because we get all these little bits of price action going back. But we're holding below it now. We've had a little poke above. It hasn't lasted. We're coming down below. Again, you want to see this sort of holding pattern going on below it. If that's the case, then it's going to keep the trend going that we've been playing for quite some time, and it would indicate a move further down. I don't expect this one to go rockets also, but that depends on what data we get from the Australia and how the RBA turn out as well. But yeah, if you're looking at this is going to be moving into the dollar zone, the US dollar zone, for probably today and tomorrow with the NFP. So look at this from the dollar side, probably more so than from the Aussie side at the moment. But yeah, if we hold below here, we had that test of 6,400, expected a bit of trouble there being a big figure. We got it, so half decent bounce. But yeah, this is your key pivot point for this one. Back above, and we're back in this box up to 65, 35, 40, and messing around all those intermediate levels as well. Another snail pace going on in Aussie Kiwi, though I'm happy to see it breaking and making a new low, just keeping this little phase going as well. So I want to see the highs coming in lower and lower. I am trying to work a little bit of a piece off my short down into this level here. I didn't bother earlier on. I'm trying to get it close to 50s. We'll see what happens. But otherwise, this one is going the right way still for me at the moment, but I expect it to be a slow grind as well. Kate, I'm going to pass it over to you because, oh, there you go, Reg just covered that for you. I'm going to pass it over to you because there's not much else going on, so I'll let you try and find something interesting for us.
All righty. Well, first of all, if you guys look at and I'm coming back regularly with this chart, and as you can see, I just went away from the euro into Germany again because we still had this I think a bit of distortion. I'm going to pick up the EU again, the European rates again soon, but. If you look at what the euro dollar is doing and what the differentials are doing, it's still very much an overlay. Okay, so I just wanted to highlight this one again, especially for the people who are new to our show and follow us via the live link on Twitter, for instance. This is something that I'm watching very much and a lot, just to see what kind of expectations that we could have for the euro dollar. And as you can see, these charts are the short-term differential between Germany and the US and the euro dollar, and it's most of the time. It's never a perfect one, but it's one hinting a lot at the other. And since we are still in an environment where, and especially with all the CBs upcoming now, where interest rate differentials are extremely important, we can see as well how the dollar yen, for instance, is moving a lot on the US yields. This one is still of importance. So sometimes, I mean, France is in trouble, Germany is in trouble. Europe is a bit in a dismal state right now. If you take away countries like Spain or the Netherlands, who are really kind of exceptions right now. But you see sometimes the market moves in ways that are perhaps not fundamentally supported, but just because people have to manage their books, and then you can fall back on this one if the fundamentals for immediately lower euro doesn't really work. What is driving it? And this is one of the drivers. So keep that chart very close. And whether you choose only the German ones or, for instance, like here the euro ones, it's up to you, but keep this chart always close to hand, because it is a driver for the differentials. As you can see, I'm kind of looking quite a lot at the differentials on various things, like in sterling, in the euro, sterling between between the sterling and the euro as well. All right, so these are things that I'm watching pretty actively. I was asking about the Kiwi. Yeah, my Kiwi. We're not out of the woods. We're far from out of the woods, but encouraging perhaps. It's a daily, so it's a bit of a longer term one. And there we see we're really not out of the woods yet. Encouraging perhaps is that yesterday we tested this bit of support here. We held. We did not go to prior lows. Is it encouraging? Perhaps, but it's still early days. I think for the rest of the day we don't have. Well, we have the Challenger layoffs, but did they ever move much? I'm not sure, unless we get a number far away from expectations. So on the medium to longer term, we're far away from being out of the woods, but perhaps encouraging is that we're starting to hold here. If you look closer to home, you see what I mean. We went a bit below, then we hear some people are talking about an inverse head and shoulder, but we're really going to need to break through 59, 59.20, even 30 to bring that really into play. Already a move through 59, 59 figure 5 would be encouraging. But for the time being, we're far away from being out of the woods. And as a matter of fact, we saw a bit of a move higher early doors in Europe, and it's already fading. There seems to be very little strength. I am trading those levels for perhaps partially this reason, and then I'm looking a bit, trying to be a bit early perhaps for the year end, where last year the antipodians have been doing really well, but I'm as the people know in the room, I'm far from being in full positions. Okay, I mean, I'm really threading very carefully on this one. One that he could be doing exactly the same here is the cable, but the cable is slightly more, I think, bid. We yesterday we tested the low of the wedge again, and it is also possible that we are starting to form an inverse head and shoulder as well. But again, in line with a lot of stuff like the euro dollar 105.40s, that Aussie that Ryan was showing around 40.50, that Kiwi that can't really keep too much of a bid cable. will need to get above and close above 120, 127, 30, 40 again to continue to push. And then the next hurdle will be around 127, 3/4. If we get through there, then people will be talking about this possible inverse head and shoulder or breaking above the wedge. And then we are talking about higher levels, I think. Until then, well, respect whatever you want to do, but respect those levels because the market is seemingly respecting them as well. And we can find
Just
this.
before you switch off
Yeah,
of cable, mate,
sorry.
I just wanted to, just before you switch off, yeah, I just want to make the point here. Cable's probably looking like the most likely to have bottomed compared to, you know, the Aussie dollars, the Kiwis, even euro dollar. And it's that formation there, that 126 low, then a new low, 125s, then you come back and 126 holds again. That is your purest signal of a potential bottom forming. Yeah, it does need to break up through that 127.40 area, and head and shoulders aside from that. That was that third move was your key move for
I agree.
sign of a potential bottom.
I'm a bit long of it, so I agree.
Yeah, good. So yeah, I reckon that one's got the most chance of breaking higher.
I think so too.
And then we're playing the half figures again, like we normally do.
Yeah, but I agree with you, Ryan. It is one that is on my really very close watch for a year-end move as well, and not only because of central banks and stuff, but just because, I mean, let's not forget that if you look at the yearly performances of equity markets, you're looking at one very big divergence between America and the rest of the world, really, but also and very much so versus the FTSE and things. I I I wouldn't be surprised if cable closes the year higher. Where? I don't know. I just wouldn't be surprised. That's how I'm trading this. Yeah. Okay. Thanks, Ryan. What else? Oh, yeah. People were asking about usually gold and silver. There's not much to say here. Okay. I mean, this really gold needs to go through those levels here to get going. It is holding up. It is a bit linked to slightly lower, but US yields, but it's just like very, very, very stable for now because geopolitics are stable. But still, where I think it is interesting is that we stabilize at pretty high levels still. Okay, so that for me is the interesting thing that is happening here. Silver is actually doing pretty okay, and we're trying. You know, we're trying. If this goes through 31, 60, 75, we could be in for a bit of fun into year end. I think it's looking not too bad, the silver actually, for a move higher. What else are you guys looking at? Ali. Oh, you're short gold. Yeah, I mean, for as long as those levels on the top side hold, I think we can play both ends of the spectrum. Yeah, and the euro dollar is really your euro dollar is really the 105.40s. And then in the yen, what do you want to do? Looking to short euro sterling, yep, we are in good company. And looking to short dollar yen before the NFP. I mean, yeah, that's a bit of coin flip. I mean, that's you know that the dollar yen can move 100 pips in a flash if the NFPs come out really a lot higher or a lot lower than expected. So if you flip a coin, make sure that your coin is small enough not to hurt your account because it's. I wouldn't do it. I mean. I wouldn't. I really wouldn't do it.
If you want to flip a coin, Ali, go to a casino because you'll probably enjoy yourself more, and you might get a free drink along the way.
Oh yeah, that's right.
In trading, we don't flip coins.
That's right. You can get a free drink in the casino. That's why I mean, gold. I just covered it, Ali. Rangy, and it needs to break above 63, 65, or below here, below the 30, 35, and then confirm below 20 to get on the move for the rest range. And with that, back over to you, mate.
Thank you very much, mate. Good stuff as always. Yeah, we haven't got an awful lot coming up this afternoon on the data front. That challenger number that Kay mentioned, I keep an eye on it because, as we mentioned on prior shows, have been hearing about, you know, job loss headlines popping up hither tither. So it has been running fairly hottish recently. The last number was just under 56,000 announced job cuts. So we'll see if that's flagging anything. And aside from that, it's initial jobless claims. So we'll see if that gives us any last minute wobbles to trade before the NFP. But otherwise, watch those headlines, trade safe, and we'll see you all tomorrow. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.